Students, today we are going to cover the practical problems for final accounts. The question is as follows. From the following balances extracted from the books of Ratan Chand, we need to prepare the trading and profit and loss account for the year ending 31st March 2018. The ledger accounts are given to us along with debit and credit balance, children. Stock is being given purchases, return inward, return outward, sales, salaries, freight and cartage, wages, rent and taxes, printing and stationery, legal expenses, advertisement, bad debts, discount, trading expenses, interest on deposit, interest on investment. There is an adjustment given at the end, children, which mentions on 31st March 2018 closing stock was valued for rupees 40,000. So children, we are required only to prepare the trading account and the profit and loss account. So children, the solution is as under. Kindly check the solution. Children, first of all, as you all know, we need to make the trading account, then it is followed by the P&L account. Now starting off with the trading account, the specimen for preparing the trading account and P&L account is both similar. Both of them, they have a debit side and a credit side, particulars and amount on both the sides, that is debit side and credit side. I have made the format for each one of you and placed the entries therein. Okay, now moving on to the first transaction. Children, if you remember in the video also I have talked about that the first entry has to be the opening stock always on the debit side of the trading account. So we have been given stock as on 1/4/2017 amounting to rupees 2000. That amount will come in the trading account as the first top entry, that is to opening stock for rupees 20,000. So the first entry, children, on the trading account is on the debit side is to opening stock amounting to rupees 20,000. Then children, we have been given purchases and we have also been given return outward. If you remember, I told you in the video when I covered the trading account, I mentioned it that the purchase returns are also called as return outwards because these are the returns we are returning outward. We are giving it back to the ones from whom we have purchased if supposingly they are defective goods. So we would mention on the debit side two purchases, from that we have to less the amount for return outwards. So the purchases mentioned are in the ledger accounts is it is mentioned 1,50,000. From that we would deduct the return outward for rupees 10,000 in the inner column. Always remember the calculation part has to be shown in the inner column and the end result has to be shown in the amount column. So when 1,50,000 is being subtracted with rupees 10,000, what we get as resultant is 1,40,000. That has to be mentioned in the amount column on the debit side of the trading account under the head purchases. Then we have freight and cartage. Children, if you remember freight and cartage, this is a direct expense. Where will it go? It will go to the trading account because trading account has all the direct expenses. It deals with all the direct expenses, that is all part of the nominal expenses which are direct in nature. They come under the trading account, and all the direct incomes, they come under the trading account on the credit side. So children, freight and cartage is a direct expense because it is directly related to the manufacturing, directly related to the factory expenses. So this is an amount for rupees 2,000 that would come in the trading account. Then wages, these are also directly related to the manufacturing and factory expenses. They would also come in the trading account. Children, on the debit side, two wages we would mention and then we would mention 20,000. Then children, we leave it till here right now. Then moving on to the credit side, children. On the credit side, we have all the income. So first of all, what is going to come is by sales. We have all the direct incomes on the credit side. Always remember of the trading account. So by sales is going to come here. Always remember the trading account debit side always has to, and the credit side always has buy. So over here we mention buy sales, that is amounting to rupees 2,90,000. From this we subtract, if supposingly there are any sales inward or sales return, we always subtract it from the sales, and in the inner column we would subtract it, and then the final end result would be shown on the amount side of the credit side. So 2,90,000 minus 5,000 as the return inward, 2,85,000 would be shown on the credit side amount column, outside column. Okay, then children, if you remember, it was mentioned on 31st March the closing stock was valued at rupees 40,000. That closing stock, always remember, I've covered it in my video also, is always shown in two accounts. One is the trading account and the other it is shown in the balance sheet. Now here in this question, children, we are not required to prepare the balance sheet, so we are going to show this closing stock only in the trading account. So we would mention it by closing stock mounting to rupees 40,000. Now children, what are we required to do? We do a total of both the debit side and the credit side. Now here the total of the credit side, children, is 2,85,000 plus 40,000, which is coming to be 3,25,000. Whereas when we total the debit side, children, we are getting less amount than the credit side. So we are required to balance both of them. And always remember, if the credit side is more of the trading account, we generate a gross profit, and if the debit side is more than the credit side of the trading account, we generate a gross loss. So children, the gross profit is coming as the difference between the debit side and the credit side. Always remember, the credit side total was 3,25,000. From this we subtract the debit side total, and the difference between both is the gross profit, which is amounting to rupees 1,43,000. That would be shown on the debit side. I just mentioned, if the credit side is more than the debit side in the trading account, we put the gross profit on the debit side. If the debit side is more from the credit side, we generate a gross loss. This gross profit or gross loss is transferred to the P&L account. So now children, we balance both of them. Both of them balancing, we get 3,25,000, and we need to show the total on both sides as 3,25,000. Now moving on to the P&L account, children. What all is included in the P&L account? Always remember, the format for preparing a P&L account is similar to the trading account. On the debit side we always use to, on the credit side we always use by. Now in the debit side of the P&L account, we have the indirect expenses which are indirectly related to the business. That is all the office and administration expenses, selling and distribution expenses, and so on. So now let us see from the ledger accounts what all is to be placed in the profit and loss account on the, first of all, on the debit side. Children, always remember, the gross profit if generated would go to the credit side of the P&L account. If it is a gross loss, then it would come on the debit side, because that is, it would come along with the expenses. So we have generated a gross profit, so it would go on the credit side of the P&L account. By gross profit transferred from trading account amounting to rupees 1,43,000. On the, now look at the debit side of the P&L account. What all expenses are we going to include over there? To salaries amounting to rupees 20,000, to rent and taxes amounting to rupees 5,000, to printing and stationery, because it is also an indirect expense, amounting to rupees 1000, to legal expenses amounting to rupees 2000, to advertisement expenses, they are also being indirect in nature related to the office and administration expenses amounting to rupees 10,000, to bad debts because these are the debts which we assume that are not going to be recovered by the business anymore, so they are also an expense for us. 3,000, to discount 2,000, to trading expenses. Always remember the trading expenses are going to be part of the P&L account. Do not get confused that trading expenses would go to the trading account. No, they would come in the P&L account amounting to rupees 5,000. Now look on the credit side of the P&L account, children. The first entry we placed as the gross profit which was transferred from the trading account. I mentioned it, children, very clearly that the gross profit if generated in the trading account would come on the credit side of the P&L account, because the credit side of the P&L account has the indirect incomes and the debit side of the P&L account has the indirect expenses. So children, the gross profit would come here on the credit side 1,43,000. Then we had two kind of interest. One was interest on investment, so we would mention by interest on investment. It is also an indirect income for the business. It would come, children, on the credit side amounting to 2 rupees 3,000. Then we would also have by interest on deposit. It is again an indirect income for the business. It would also come on the credit side of the P&L account amounting to rupees 2,000. Now children, what are we again required to do? We are required to total both the sides. When we total the credit side, children, we have 1,43,000 plus 3,000 plus 2,000, that is amounting to rupees 1,48,000. And when we total, children, the debit side, we have less amount than this. We are running short by 1 lakh rupees. So that 1 lakh rupees, children, has to come as the net profit on the debit side. Always remember, if the difference of the credit side and the debit side, if the credit side is more, we generate net profit. If the debit side is more, we generate net loss. Always remember, net profit or net loss, they have to be transferred to the capital account in the balance sheet. So here, children, we have generated net profit amounting to rupees 1 lakh, because when we totaled the indirect expenses on the P&L account in the debit side, that is to salaries, to rent and taxes and all, we generated lesser amount than the credit side. So the balance, we mentioned it, the balance between the both as net profit, and that is amounting to rupees 1 lakh rupees. Now we total both the sides with what was the total balance of the credit side, that is 1,48,000. Now children, when we have totaled it, we have got 1,48,000 as the balance. So children, today we have covered the trading account and the P&L account for one of the practical problems. Please go through the video carefully and clear your doubts on the Microsoft Teams platform. Till then, take care. Thank you. Have a good day.